Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about Happiest Minds, which can be a 40,000 crore market cap company in the next 3 to 4 years. So let's understand in detail about the business and why I believe so that this could become 4x from here. So let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position into any share that I talk about should do that with their own due diligence and research. And I'm not in favor or against any company that I talk about. Before I talk about Happiest Minds, here's a small request that kindly support me on Patreon, and once you do that, it will help me grow the channel, help you also ask me questions in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and a number of podcasts that I put up on short-term and long-term calls. Plus, I'll answer all your queries, whatever you have about the markets. And if you can pay $100 straight away, then you get 12 months access by paying for 10 months, so you get 20% extra by paying $100 upfront. For detailed market or company talk, you can directly email me and we can work things out with a different fee. And also, if you cannot pay through a credit card, kindly do email me, and I would try to have a different mode of payment for the same membership later on sometime. Now about the company, established in 2011, Happiest Minds provides and enables digital transformations for enterprises. So basically, they provide all the digital, you can say, support that any company requires today. So any company that wants to go digital, that is currently in a digital phase and wants to develop in the same field, it is Happiest Minds is one of the companies that are providing this. Now, why this company has been doing well ever since its listing, we'll come to that now. uh, First of all, it is backed by the famed entrepreneur Ashok Soota, and he is from the fame of Mindtree as well as Wipro. So we'll discuss that later on in this presentation. And now he has come up with Happiest Minds, and it is just a 10-year-old company. It is not a 40-50-year-old company that has been growing extremely fast. 96% of its business is digital, mostly digital delivery, with expertise in IoT, robotics, you have artificial intelligence, blockchain, the likes of, you can say, which is used in Bitcoin or other sorts of such currencies, cloud computing, security analytics, among other products. So these are the kind of products that Happiest Minds provide. So if you look through it, these are the major points today that anyone in the IT field talk about. And this is one company that is providing all these to its consumers. It is probably the only company of its kind which is listed in India. Why I am saying this is because you see into large cap IT, most of them are IT service providers. You look at mid cap IT, some of them are LPOs, BPOs, etc., and diversifying into other software products. But very less of them are into this AI theme, IoT, robotics, etc., and all together. So some companies might be in robotics but not in IoT, some might be in IoT but not in blockchain, but this provides everything. And you get this company at a market cap of 10,000 crore and not at 40-50,000 crores. And this is what I'm surprised about, that such company providing into such kind of expertise, which is today is like hot cake, is selling like hot cake, is currently that you're getting at 10,000 crore market cap. Currently I'm invested in the company, so kindly take my analysis with a pinch of salt and do your own analysis, consult your own financial advisor, only then take a call. Do not take a call just purely on the basis of this presentation. Coming to the financials, now these are Q3 numbers for this year versus last year, and this is the only number that we have because it has been a very recent listing. Sales grew by around 12%, but look at the profit growth. Profit grew by 98%, and this is the big thing, that in this space there is so much of opportunity that the profit growth is exceptional. There are not many expenses that the company has, and I'll talk about how the, you can say, the pandemic has either helped or not helped the company and all those aspects. But what has happened is they have done sales of 193 crores. They have had, you can say, expenses of around 170 crores or so. They had a profit of around 23 or 28 crores, so they did expenses of 160, 165 crores, and then they had other income of 8 crores versus 4 crores, so other income also doubled, and eventually they came out with a profit of 42 crores after paying taxes, etc. It's a very clean, you can say, P&L account that anybody can be able to understand. This is the biggest thing I like in any company. Whichever company I would like to invest into or even trade into, I would like to have a very clean balance sheet and P&L account, so that I'm able to understand their business whole through, and able to gauge as to what could be the numbers going forward. So a similar sort of, you can say, P&L account I see here. Return on equity is absolutely fantastic at around 70 to 80%, and you have a net profit margin of around 24-25%, and this is the biggest point why the stock is trading at a valuation of 60-70 times earnings. I'll analyze the valuation in a bit, but what I can tell you is that most of the companies that are listed in the IT domain are basically into IT, information technology. This company is into majorly digital. So most of the companies that are into the IT domain, as I have explained, are digital, but they are 40 to 50% digital. And 10 years ago, when I started getting into the markets, I remember that because one of the earliest, you can say, companies that I invested into was Tech Mahindra, and at that point Satyam also I invested into. Those were 20 to 25% X max, 30% digital. That was the theme. Today this is 98, 97% digital, at least 96% for sure, and that is the biggest, you can say, positive of the company. So what are the salient features? One of the best margins in the industry. So if we take IT as the industry and as this company, and Mr. Suda has always talked about in his couple of interviews that he like to be compared with the big wigs of the world, and two or three companies he named, one of them listed in Japan, two listed in US, and in India there is no direct comparable. But if you look at IT companies, they normally trade between 18 to 20 times. Currently they are trading at around 30-35 times earnings, whereas this company is trading at a 70 times. So if we say 12 rupees EPS, then we are looking at this is trading at around 60 times earnings at the moment on the FY21 earnings basis. And the reason for this is the profit margin of, you can say, a net profit margin of 24%, and is near double to what most of the IT companies currently have. The profits and margins have doubled year on year, whereas sales are up in teens. So we are looking at sales up in being 12-13%, whereas you look at what profits have done. So that is also a big positive for a company, that yes, in the IT domain sales might suffer because of the higher competition, but if they are able to generate a lot of margin and ROEs and eventually higher EPS, then that is what is required by most of the investors. So that is a huge positive. Plus they have clients in many industries. They are not dependent on one or two industry. Like for example, Mindtree is mostly dependent on the BFSI domain, on the infrastructure domain, whereas this company is into many, you can say, industry, a number of industries. So there's no, you can say, dependence on a particular industry, and that industry doesn't do well for a particular time, then probably Happiest Mind will suffer. So that is not the case with Happiest Minds. So as I have mentioned that they have a number of clients all across the board, there is low impact of you can say pandemic as airlines and infra accounts for very less. So most of you can say closest to some of the industries that would suffer going forward is probably leisure, infrastructure, and airlines, and they have very less you can say clientele in that industry. Their most of the clienteles are in the education, and that is what I'll come to when I'm discussing about. The salient features. So in industries which are going to suffer in this sort of an environment, they have very less clientele in that. So that has been the case, and that is why the numbers have remained very robust. It is currently on a cusp of a major breakout as we are seeing that it's making new highs, etc. And this is because of the fact that people or investors think that even currently at 10,000 crore market cap, the company is very cheaply valued and should not remain at such a market cap. Valuations are reasonable if growth continues. Now, this is a kind of a contradictory thing because it is already at twice of what most of the IT companies are trading at, but I believe that similar to most of the larger retail companies, the big wigs in the consumption domain, the big wigs in the auto domain, this company would also command a premium twice of that of the most of the IT companies because of the kind of business that it is doing compared to other companies, and kind of digitization that it is doing, which will be the name of the game going forward in the next 5 to 7 years. So that is probably why the valuations is such, and I think it will remain in such territory going forward. The chairman has made wealth for investors in Wipro. So I was talking about it. So he was the founding member, one of the founding members of Wipro in 1999. He was one of the sorry, 1984. He was one of the founding members of Mindtree in 2001, and 10 years later he has come out with Happiest Minds. And this is the very first thing that struck me, that somebody who has made Wipro a company which is now one of the largest here in India, then a Mindtree which is a mid cap, a big mid cap IT firm, and now this is a company he started with this third venture. I'm pretty positive that this is going the same way, and we could be seeing it at 40 50,000 crore market cap. Education and education technology is something at the forefront of Happiest Minds, and I think it commands, I'm not sure of the exact numbers, but around 20 to 22% of the business, and this could be huge in years. We have seen how this pandemic has changed the shape of how students are getting educated, whether it is in kindergarten or in classes 1 to 5, or you look at universities. It is all becoming digital, and this is a company that is helping most of the industry members take that path. So that is a huge you can say opportunity that lies ahead for Happiest Minds. Some of the risks that are involved with investing in this sort of a company, and I would like to point that out. I don't want to be completely biased because I'm invested into the stock. 150 odd clients, I think 157 or 156, something like that, are the number of clients, but most business come from the top 25, which is a $1 billion club probably. And I believe that they need to increase this has not increased over the last year. It has remained, I think, 24, 25, or 26, something like that. Not huge. So it's only probably what, 1/6, 16%. So probably you can say 90, over 90% of the revenue comes from 16% of the clients, and that is a huge, you can say, a negative that one can look at. Valuations are stretched and numbers need to support, and that is the thing. So if this grows at 25 30%, then it should not trade at 60 70 times. It will be again trading at say 35 times, 30 times. I'm confident it will grow at 60 70% at least, but if that doesn't happen, valuations are stretched in that case. Then you have another situation in which Mr. Suta is around 78 years old or something like that. Finding the best successor for him would be a challenge, and we have seen that uh, in Infosys how a lot of turmoil and turbulence happened when Mr. Narayan Murthy left, and then you had to find a successor, and a lot of things happened. So hopefully they'll be able to get that right, so that they'll concentrate on the business. Revenue per employee is extremely less compared to global peers. It is around 7 lakh, 6 to 7 lakh rupees, compared to around 1 to 1.5 crore of rupees. So, why I talk about global peers? Because Mr. Suda himself talked about it during an IPO interview with one of the channels. So, he talked about the fact that the only comparable companies for Happiest Minds are in listed in US or Japan, and two three companies he named. And probably on a broader basis, I do agree with it that being so digital and providing such a gamut of digital products, and not many do provide. In fact, from the listed space, as far as I know, I don't think any provide in such vigor. So that's the case. But those companies are generating 1 to 1.5 crores per employee per year. This is generating 7 lakhs. So you could say that there's a lot of room for opportunity for generating more money, but we'll see how that goes. And remember that a big risk with such companies is that technology is ever evolving. For example, we didn't knew about robotics or AI, particularly artificial intelligence, and you can say bitcoins, etc., in that sense. And if some other technology comes around and Happiest Minds is not able to grapple with it, then there is problem, and that technology is a game changer. So the company has to be always on its toes in order to perform. So coming to the valuations projection, I think it should have an EPS of between 12 to 12.2 rupees this year. So hoping for a decent March numbers. Currently it is trading at, if we say 12 times earnings, then at 700 odd rupees that it has closed at yesterday. So it is trading at 60 to 65 times earnings, which is expensive compared to most of the IT peers trading at 30 32 times, so double of that. But then you need to understand that it is growing at 100%, 70 80 100%. If growth remains in this range of 70 to 100% CAGR, then valuations will remain here. I'm pretty confident that if company keeps on performing with 65-70% profit growth, then the valuations will be 60 to 70 times earnings. And assuming that the numbers remain robust, then we will be having an EPS of between 54-55 to the upper end of 60 rupees if the growth really is 70% plus. If it is slightly less than 55, so 60 to 70% growth, then we are looking at 60 rupees EPS in FY24. Based on that, if we take even 50 times earnings, then we are looking at around 3000 rupees as the target. And at around 2700 to 3000 rupees, the company would be around 40,000 crore market cap, because currently the price is 700. Four times of it is probably 2800, and you can easily do the maths that 10,000 crore, four times of that would be 40,000 crores. For that to happen for the next 3 years, quarter after quarter, next 10 12 quarters, they need to generate growth of 60 to 70%. Somehow I believe they will do it because of the kind of business opportunities they have. If you look at the technicals of the stock, then it has scaled all-time highs this week, as we have seen. It may continue to surge if numbers support. So we have to look at how the numbers come out uh, for the March quarter, and how it pans out. If it does come out well, then I won't be surprised that we will see levels of 800 850 very soon. 630 is a very strong support, so that is where, if you can say a decline comes in around 650 660, that is where you need to get in. I think 630 625 is a strong support. So as I have explained, 630 is a strong support. Any declines to 660 is a buying opportunity. And if you buy for long term, keep a 550 stop loss. Don't put a 600 620 stop loss. Have a deep stop loss at 550. You're close below 550, then you exit. And I can see this stock go Once it crosses 800, this can easily go to 1050, in no time. Wait for consolidation or declines to add into the stock. Whenever a decline happens, then you just board the plane and buy the stock. But do not buy in an upsurge. You could be buying at the top, and then we could see 1 or 2 months of consolidation. So if you don't want that, then wait for declines to buy. If you are okay with a 1 or 2 months of consolidation, then you can buy at current levels as well. So what needs to be done? In my opinion, add on major dips. That would be an opportunity like we had just about 2-3 weeks back when the stock fell all the way to 618. That was the low that it made a couple of weeks back. In terms of numbers and fundamentals, all look very good and will perform well if held for 5-8 years. I think if you hold it, if you hold thinking that you will sell it in 2026, then probably you'll get your targets by 2024 as I've explained. But if you buy thinking that in the next 6 months you're going to make a lot of money, then the stock has already gone up 4x. So it should consolidate, and that is the nature of the stock market. Stocks consolidate, decline, and then go up. Even best of the stocks do that. So it could happen with Happiest Minds as well. So this was my video on Happiest Minds. Please like and subscribe my channel, hit the bell icon so you can get my videos straight away when I post it, and kindly support me on Patreon. Thanks a lot for watching.